I know you guys and gals probably don't want to hear this, but the markets are a lot like sports, especially baseball. Streaks, major streaks, S&P 7 winning days in a row. Apple 7 new all-time highs and all-time closing highs in a row. Tesla up 11 days in a row. We're down now, but who knows? Light CPI, boom. We'll continue those winning streaks. Q2 earnings season off to a rough start. We'll be talking inflation at 8:35 with none other than Blue Putnam. It's ready to start the show. Let's go, AB.
Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, folks, starting out in the red after that all-time closing high yesterday at 56.88. Have not seen that yet, so there's a good number on the upside. Down 9.25 handles, 56.79.75. Buck taking a little bit of a heat, trying to hold the 104.50 level. Down at 17 cents, 104.55. TLT quiet here, down a few pennies, 92.58. Crude trying to steady itself in the 82 handle, down a nickel at 82.05. Gold having another good day, inside day, working on a triple top, up 620, 23.85.80. Hi-ho silver over 31, up 19 cents, 31.20. Bitcoin having a good day, up $1,335 at 58,960. We'll bring in Triple D, we'll bring in AB, and Dennis, man, wow. Rough start to Q2 earnings season, I guess, is a good place to start.
Yeah, I mean, this is basically it. We got the first major report, and it's Delta, and it's not that bad, but the market absolutely hates it when you don't hit your numbers, even if it's just by a little smidgen there. We'll bring AB in to tell us about this smidgen of a miss.
Yeah, so Delta came in with an EPS of $2.36 that missed the $2.37 estimate. Sales actually beat $16.65 billion versus the $15.45 billion. The company reaffirmed 2024 outlook. Delta expects Q3 total revenue growth of 2 to 4%, operating margin of 11 to 13%. They said their EPS for Q3 was going to come in at $1.70 to $2. The expectation was $2.06. So there, with that guidance for Q3, the EPS revenue coming in, the EPS guidance coming in a little bit below expectations. But like you said, Dennis, I mean, just a very slight miss on that EPS number. Stock down about 9%, $4 here this morning on the news. And we've talked about it a lot on this show that just airlines not seen as kind of the cream of the crop when it comes to stocks in the market. People are just not as willing to buy the airlines unless they're absolutely crushing it.
Victim of their own bar here too, and the reason I say that is the CEO on CNBC 6 months ago said how well they were doing, how they needed to raise guidance more, they couldn't be doing better. And those numbers and those street estimates came up because he was so excited to obviously pump his stock, and he raised it high enough that they couldn't hit those numbers. So I mean, I don't feel sorry for them whatsoever in this case. This is the CEO's doing. So, I've never seen a CEO come on, maybe, that one that came on there and said, we're raking it in. But, he was on CNBC and just tooting his own horn and just talking about how good they were doing and how much they needed to raise guidance here. Well, they raised it up too much for them. Cyclical business, buddy. It's not always as good as you think it is. And economy slowing down a little bit. And we are seeing signs. This is more signs that the economy, the real economy, not the AI economy, not the technology economy, but the general, everything everyday economy is slowing.
Well,
saw it obviously, recently with Helen of Troy, lots of different businesses talking about the consumer, doing a little bit less discretionary, more, talking about what they need to buy, necessities over discretionary. Flights, for the most part, for the majority of, customers, a lot of customers are not, it's not a necessity. I mean, for businesses it is, but for, we're going to go on this plane ride, we're going to take a little easy. We're a little bit tight for cash here right now. Starting to see that here too. There's a reason you see this complete separation here. Obviously, CPI might change things today, but Delta, as good as last quarter was, this was not good.
I mean, it's kind of a mixed though bag, because we did set the record of most travelers ever screened last week at the TSA over July 4th weekend. So people are clearly flying, but maybe to your point, Dennis, people are opting for more budget airlines. Maybe people are flying more Spirit. And
they just raised the bar too much though, AB. Like he raised the bar up so that he couldn't hit it. Like he raised the bar up so much on that last report. And I remember, if you rewind the show, I think it was actually only 3 months ago, it was last quarter. They just were raising it so much that they hit it and it's unattainable. So again, it's not saying, that, Delta is necessarily the airlines or nobody's flying. I think you're starting to see a slight slowdown, but the projections that everybody was just going to fly, everywhere they could go, he couldn't hit those. So I'm not actually saying that people aren't flying. I'm saying the projections that this CEO put on this company here, that bar, he set way too high.
I'm going to agree with both of you for a change here. First of all, bar way too high, right? Just like, the expectations going on CNBC. The eyeball test is failing me here because, man, oh man, if you go to Denver Airport, and I mean, just jammed. I mean, nowhere to sit, people everywhere. Delta, I mean, I'm knock on wood here. The flights have just been incredible. They get in, sit down, shut up. We feed you, we land, we take off on time. So the eyeball test is failing me here. The pre-market action is telling you what investors think here. We are trading here now, pre-market low 42.33. I'm just looking at this whole area here. Back in March, we did a lot of work between 41.80 and 42. That's what I'd be looking for today over the next couple days. Absolute must hold area. If you can find support in this area, make a couple lows, maybe go back up and fill the gap. But this is a big haircut for Delta. It's affecting to United Airlines. That's down 224. We don't even have to love back at 27. That's been support. So across the board here, I mean, seeing conflicting things. The earnings are down, but man, I'm telling you, Dennis, those airports are jammed.
Last time I was at the Denver airport, Joel, I mean, the Denver airport is one that's like notoriously always packed. But the last time I was there, they had just opened a new screening, a new line for security that you could go through. And like, not a lot of people, I guess, knew about it. So one of the TSA agents was like, "Oh, go up to that escalator, take a right." And there was no one in that line. And it was amazing. And I got through right away while there was like a 30-minute wait at the other ones. But I was just going to say, I mean, when you're looking at the price action of these other airlines, I actually think this Delta report, you could argue, is like worse news for the other airlines than it is for Delta, because Delta is still, the most profitable airline business. It's still kind of the best of breed. And if they're struggling right now to, beat their numbers while we're hitting record TSA travel numbers, what is that going to mean for, Southwest going forward, or for United, or for some of these other airlines? So, I think Delta in the long run, again, if you wanted to buy the dip on airlines or get in here, like Delta would still be the one that I'd be interested in buying. But now after this report, I'm going to be a little bit worried about the other ones.
Best of breed, Delta for sure. I'm with you on that. I mean, look at Save, look at JetBlue, look at American Airlines. I have a piece of that, just a disaster. Yeah, I should have sold it at a loss. You want to have some other diversification. You look at trading 7 times earnings and you think, oh, it'll come back eventually. Your stock trades 7 or 8 times earnings. It's because they don't give a crap about it. So I think we've got to stop just looking and taking basic valuation metrics in this market. Maybe it changes one day. Maybe it's going to be lower interest rates that change it. But the narrative matters. And when your stocks are trading 7, 8 times PEs, it's because either one of 2 things. 1, they think earnings are going to go down, or 2, they don't care about it. And we've seen time and time again that the stocks are trading with low PEs just do not get multiple expansion, it seems like, ever. So it's better to buy, it seems like, the 30 times earnings stocks, because those continue to go up and grow into those multiples. And the ones that are trading 7 or 8 times are just junk. That's what really this market is right now.
Do you know what I just realized? Do you know what today is?
7-Eleven.
Yes.
Thursday?
And you know what that is?
Oh, it's Slurpee Day.
Yes. Yes.
Slurpee Day. 7-Eleven.
Yeah. Yep. You guys are brilliant. You guys are so much sharper than you were on Monday.
I just looked
Tuesday,
down
and
at the
Wednesday.
calendar and it says 2024 7-Eleven. It just jumped right out at me. I was
Yeah.
like, it's Slurpee Day.
Yeah.
Slurpee Days. Everybody's happy. You going to get a Slurpee, AB?
There is a 7-Eleven walking distance from the Benzinga office, so there's a strong chance I will go get a Slurpee. It's tough.
Are they
though. I mean,
free?
yeah, it's a 7 ounce.
Yeah.
It's a 7-ounce little free Slurpee, and I'm sure they actually make money from people coming in and then they start buying other stuff there. But like, I don't know, the last few times I've gotten a Slurpee, I'm like, this isn't as good as when I was a kid. It's like too much sugar now. I don't know. So maybe I'll have to get a little. Maybe I'll even fill up even the very small one, fill it up like halfway, and just get a little shot of Slurpee today for 7-Eleven Day. But I remember as a kid, like that was like a fun activity. Go get a free Slurpee on 7-Eleven. So yeah, we're like, the summer's flying by. We're basically halfway through it. And typically the summer is a slower month for the stock market and news, but we've had a lot to talk about the past couple months.
So, and we still have a lot to talk about, because
Well,
we got a bunch of stories here in the next 18 minutes before we end up getting to our CPI data in blue, our boy Blue. I'd like to go, well, first maybe we should do the stock split. There's another stock split on the horizon. It's MicroStrategy, MSTR. It's getting a big pop here. We know when these things announce stock splits, these stocks go straight up, it seems like. That is what is happening this morning. MSTR announces 10-for-1 stock split. Stock ripping higher here on in the pre-markets, up $67. Bitcoin's up a little bit too, so that doesn't hurt, but definitely helps when they announce these stock splits. We didn't have MSTR on our list, Joel. Remember we were trying to come up with who's going to be the next one?
Yeah.
We didn't have Sailor stock on our list here.
I'll just give the pre-market pop here to 1,400. That's $30 away. The stock has been in a little bit volatile. If you're looking for some confluence at that level, well, we're still below. I keep an eye on 1384.41. That is your 3-6-day high ahead of the pre-market high. But we know how the street loves splits here, so getting the initial pop, we'll see how it holds up in the regular session and over the next few days.
So, Dennis, I'm curious about, we talk about the price action when a company announces splits. You typically have this pre-split run-up, and then in certain cases, at least what we've seen in the past couple of months, you pull up Chipotle, you kind of have this post-split sell-off. But long-term, the splits are typically pretty good, for the stock, and maybe that's not as much about the actual split as it is about that companies that are doing well are the ones that are announcing splits. But like, how long do you think that the post-split sell-off typically would last? Like, is it a couple of weeks? Because it's like the short-term weakness, but then long-term, the stock is still, or the split is still good for the stock. Like, I want to buy some Chipotle, and basically I'm asking, when should I come in and buy this?
Yeah, I think the post-split hangover, you've kind of priced a lot of it here. And there's what else is happening with Chipotle is simply that what we were talking about yesterday is restaurant stocks are all going down across the board. And they're taking the leaders with them now too. So people are concerned the consumer is going out to eat less. Again, more evidence that the consumer is getting tighter. The spending of the consumer is getting a little bit tighter. But, McDonald's obviously introducing the $5 combo. I was looking, I think it was Burger King or one of them the other day. It was coming out with something too to compete. So you're starting to get some competition in pricing, a little bit of discount pricing. We were in this in this like honeymoon, like everything COVID, everybody's going out and doing stuff again for a couple years. It's slowing down a bit. So you're seeing competition come from all over the place here. That probably doesn't help Chipotle, but Chipotle has been best of breed for a long time. Valuation's always been not attractive at all on Chipotle, but we know, we've just had this conversation, there's companies that are trading 30, 35 continue to be the leaders, and I think Chipotle still remains a leader here. So I think your post-split hangover is probably over, to answer your question, AB. I think you kind of had that. Now you're just getting, how much competition is coming from other areas here. Are people not going to Chipotle and they're going to McDonald's, or they're going to the other, or is Chipotle going to have to discount to compete? Because it is quick service. It's not fast food, but it is quick service, kind of the same thing. I think there's competition here, at least in pricing.
I got a list of different restaurant stocks here.
Go.
And their year-to-date performance.
Oh
and you can see it's mostly red. You've got Noodles & Co. down 50%, Cracker Barrel, Denny's, and you've got a few winners down here. Shake Shack up about 20%, Domino's Pizza up 20%, which we don't talk about Domino's Pizza stock enough, because that stock over the past 15 years has outperformed a lot of, even like you look at it compared to like your Apples and probably not at this point Nvidia's, but you look at it against a lot of the big tech stocks, and Domino's Pizza has done really well. Chipotle up 37%, Texas Roadhouse, that one's a little surprising to me, and then Sweet Green, of course. So I thought this was interesting, just again looking at how many are down compared to, you have the few winners, but the majority of these restaurant stocks, to your point, Dennis,
they're
have
all
been getting crushed.
I tell you, this CMG, are you looking for a trade, or are you looking for a long-term play?
I think it's one of those things where every time I go to Chipotle, it's busy. It's the demographics. It's so diverse. You see like every type of different, you have like the wealthier suburban soccer moms in there. You have younger people in there. You have, and it's just like, it seems like it's just a one of those stocks that I just don't see how over time this company doesn't continue to kill it and make a lot of money. And the last time that I had that kind of eye test, well, before I move on, Dennis or Joel, sorry, if you had any technicals you wanted to give.
I was just going to say, I mean, you got to give it to Fit. I mean, right now you got a gap fill. You broke out for 56 in March. So if you're stepping out here, I'd be prepared to write it down to 56. If I was waiting to take longer, whatever, I'd perhaps wait for it to come down there. This is like we're early in July. That's a pretty thick red candle right there. Look at these green candles going up, going up, going up. So once it gives this one red candle, it's usually an indication that there's a few more on the horizon. So I wouldn't be, you pull back from, nearly $70. I don't know. I think you'd be a little early here with CMG.
What is the valuation? Because it is the food stock and it is not an AI play. So I'm going into my trusty Benzinga calendar. You can just hit the details. You go to CMG. This update's fair. I think it's daily actually with the price. So they do a pretty good job, the algorithm, updating it daily. So if we go down to CMG and we look at the PE and we see 53 on a forward basis, that's about as much as you can ever pay for a restaurant. So I'm not saying we're PE traders. I just got done saying PE doesn't matter, and it hasn't in this case. But this stock is everything but cheap. This stock is very, 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 very expensive. This stock has performed unbelievably, so it's deserved a higher valuation. But if they even get a hiccup, if the growth slows just a tad, the valuation of the PE just contracts quickly. We saw it with Lululemon. Lululemon was trading 50 times forever. Not saying Chipotle is Lululemon. Just saying we had the first red candle back early, October in Lululemon. And now all of a sudden they're calling it Under Armour because that's what the street does. It turns around, starts ganging up, and they kick you when you're down. So it's hard when you look at a chart like Chipotle and the stock's up thousands of percent. I mean, even in the last year, the stocks went from 30 to 60. It's still up 100% in the last year. In the last 5 years, the stock's up 400% or 500%. It's been an unbelievable performer, but it's not a technology company. It is a restaurant. I mean, I think I match the falling knife. I think you got to wait until you actually see, consolidation. To Brian Shannon's point yesterday, start buying the strength after the dip. Such a great quote, Brian Shannon. Just such a great guess. He always says, buy the strength after the dip, not buy the beginning of the dip. We're still in the beginning of the dip here. Maybe we wait. Maybe AB, you wait for some strength after the dip, but you keep it on your shopping list if you really like it. If valuation doesn't scare you, I think after valuation scares the hell out of me on Chipotle. It's always scared me, and I've missed the entire run because of it. But
that's what I was gonna say. Is
I've missed the entire run because of it.
It's been expensive for the past 5 years. You look at the PE and valuation, you're like, oh my god, I can't pay this much for a restaurant stock. Next thing you know, you look at the stock and it's up another 100%. I will say the one downside I think with a stock like Chipotle is really one of the only ways for the company to like continue growth and increase revenue is by opening new stores. And we've seen, that with different chains in the past, whether it be Starbucks, and then eventually you hit a point where you open too many stores. And every time you open a new store, you're paying for that. You're taking on debt for it. So it's tough because I don't think with the current amount of locations or whatever, you're going to be able to continue to see, say, 20% revenue growth, over time. That you're kind of backed against a wall where your only path is to open more stores, which again can cause some more problems. If it doesn't, work out as well as they would like to. I was just going to say
before we move on here, I just blew up this chart. Okay. This monthly chart, and you guys see that question mark right there?
Yep.
Do you remember what happened then?
Salmonella outbreak.
E. coli.
E. coli.
Yeah. Yep. Look at that. We don't have anything like that, but maybe if they get a good food poisoning incident, and then
that's your opportunity.
They go down for 2 years. That's what happened after that. And then look at the recovery, the old E. coli, and I think it was only in 8 restaurants. So, but no, not. I'm just. I remember that happening. And
we were scared. We were doing shows back then, and we're like, I'm not touching or eating there. I'm like, I don't want E. coli because it was like it kept happening. They get another case at another store, and another case at another store, and they were blaming the lettuce.
I did once.
Blaming something else.
Have you ever ate there, Dennis?
Yeah, once. I think I've ate there once.
What was
they
it?
don't have them they do have them in Toronto, I think. But
I was like $10 for a burrito. I mean, I just wasn't that, and I'm not big with the bowls. I mean, I'm a burrito guy. I like burritos. I was just like, I don't know, couldn't have been. It was a long time ago, but everyone I know loves it.
$20 now.
Yeah, my son-in-law loves
that. Also wasn't the first. They had earlier E. coli outbreaks in 2016 as well. I think like closer to around 2013, 2012. So that was, I think, why the stock got crushed, because they were like, oh my God, we're going again. But I was going to say this is one of those things that's just kind of like, well, I'm actually in the restaurant, like an eye test thing. I'm looking around. I'm saying, oh my God, this place has to be killing it. The other stock, the last time I had one of those eye test calls on here was in early April, the first time I ever went to a Costco on a Saturday, and I couldn't even find a parking spot. I was like, this thing. And again, this was, I just checked my phone to look at my text to my friend who's in investing, and I texted him that day, and I was like, Costco, I mean, this thing is a monster. And that was on April 6th, Saturday, April 6th. I texted him that. I didn't even end up making the buy there, but it was at about $700 flat at that time, and we're up to almost $900 today, or above 900 pre-market. We do have news on Costco. The company is raising the price of its membership here, which is driving the stock higher by about 2.5%. You actually have some analysts coming in after this. Tells the advisory group raises price target to 925. B of A raises price target to 962. Baird maintains outperform, raises price target to 975. So the street is loving this move to increase membership fees at Costco. I like that, Joel. You put the Bree eyeball indicator there. That's, again, where I should have bought the stock, didn't. I still have some exposure, through some ETFs and whatnot, but it hurts a little bit when you make a call like that, then you don't put your money where your mouth is. Yeah,
and this is another example of a company that's traded with a high multiple the whole time, but just continues to trade that high multiple because they continue to grow. And best of breed, obviously, has been unbelievable there. When are they raising the price of the hot dog pop combo? That's what we want to know. $1.50. They said they'll never raise that up.
You gotta love the onions. The onions too. The onion grinder. Do you know that? To put on.
Do they have the onion grinder there for you to dump onions?
They do.
Over?
Yeah. Just get there, put all the hot onions. I mean, I drop $400 or $500 every time I go out there. Lisa sends me out there very specific.
Makes up for it.
Yeah, and then I come back with those the lobster tails and the crab claws. I mean, that takes up a good part of it, but not way off the pre-market high. I'm sure the 926.07. Wow, this is just blowing everything away. I wouldn't be chasing. I wouldn't necessarily be selling. If you're looking for support, I don't know. 890 was the top of yesterday's range, so that's not really that far away. Nice pop though, not holding the gains this morning.
Well, it got ridiculous and got over $920. I don't know what the algos are buying up $50. Now, again, this is good news because it goes right for the shareholders because it goes right to the bottom line. When you raise this, it's all profit because this is something you're getting nothing for, your membership fee. So it's not like, oh, we're raising the price of something, but it's because the food cost is going up or the delivery cost is going up. It's right to the bottom line. So
I mean, how many members do they have?
raised,
I mean, do the math. I mean, how much are they adding? And we don't have time to do
$5, how many members they have. I mean, that's what the market's probably already done as the math, and it's significant. But again, it's to pop at $40 last night, the market cap would have put on there would have been nothing short of incredible, or $45. It's given back over half that gain. So I don't think it's giving it all back. Again, we have CPI coming, so who the hell knows? Maybe everything's going to give it all back. I think we should go and preview this number here too.
Yeah,
I kind of feel pretty good about this number. I don't know why. I feel like inflation is curtailing here to a certain extent. I don't know. I just feel like slowdowns, little pockets of slowdowns. We're seeing McDonald's drop some prices. Maybe they're ahead of it a bit, but I feel like this is going to be an okay number today.
Everyone thinks it's going to be okay number.
Maybe we're wrong thinking that. Then.
Well, yeah. So for the numbers, we're looking for CPI year over year to come in at 3.1%. That will be a drop from 3.3% the month prior in May. We're looking for core CPI to stay steady at 0.2%. We're looking for core CPI to come in at 3.4%. We also have initial jobless claims, which obviously isn't going to be as big of a deal, but that is expected to drop slightly as well. Consumer price index for June is supposed to come in at 0.1%. It was actually 0% in May. So that's expected to go up by 0.1%. But again, the year over year CPI is expected to drop closer to that 3% flat level. The only thing I'm concerned about, Dennis, and not with the actual numbers, is just that maybe the good numbers, like it was already priced. You saw the market yesterday. We've hit
yesterday was silly.
Yesterday
was silly.
Is that already getting priced into some extent that this inflation report is expected to come in?
IWM, they are excited right now in the IWM. It just rallied 30 cents here right now as we speak. So somebody's jumping the gun and saying, I want to be long short small caps. They were jumping the gun yesterday though too, with IWM showing some decent strength here. Obviously not keeping up with this buy, not at all, but popping up a little bit here. It's been dead money. IWM's dead money all year, just dead money. S&P's up 18%, whatever the hell it's up. IWM basically up nothing. So it was perking up. It's perking up a little bit here in the pre-market. Is this the time, or is this just another opportunity? We get a pop and a drop type deal. We're going to find out a lot of information in 1 minute. Holy IWM. They're ripping it higher, Joel, right now. Ripping it higher.
It's up. It's up 38 cents.
Are we excited coming in?
It's in an important area. If you're looking at your dailies, yesterday's high in this area.
I think it's going to be good.
Yeah, that you have the high on Monday right here too. So not much after that. Up another stick here. S&Ps were leaking, coming back to life here. We are now 40 seconds away. We are going to get rid of Dennis. We are going to go to the 1 minute chart that just, it's the 1 minute chart. What else could you do here at 8:30? We will look at the closing price. We'll see the algo jumpers are making their move in the IWM as we speak. The people with the super fast internet into the economics department or whatever are getting the numbers now. 10 seconds away, 81.50. That all-time closing high from yesterday, 56.88. We're getting a bump. We're getting another bump.
Oh
wow! Is it light? Is it light?
Yeah.
Oh my gosh!
All right,
look at that. It's light.
Numbers to come in, but we know we can see from right there what
it's
the market
light.
is doing.
Woo! 5,600. Come on, baby.
CPI 3% flat versus the 3.1% estimated. CPI month over month for June came in at 0.1% versus 0.2% estimated. Jobless claims came in lighter than expected as well. CPI month over month for June. Whoa. Now I'm seeing okay, here we go. So that was for core CPI, came in at 0.1% versus 0.2%. The month over month, just regular standard CPI came in at negative 0.1% versus a positive 0.1% estimated. So that actually came in negative month over month from May to June. And again, it was 0.0% prior. We were actually expecting that number to go up to 0.1% for June. Instead, it came in 0.1% below that 0% that we saw in May. So light across the board really here. Joel, I mean, what are we doing here in the market?
We're ripping, man. It was just the street was expecting those algo jumpers in the IWM. Absolutely had it right. Great catch by Dennis there. As he mentioned, to buying it right up to the previous day's high. Now you blast it over 206.50, closer to 207. Your litmus test here, TLT up over $1. I mean, this is just 7-day winning streak. Right now, looks like it could be 8. Nice pop here. Fed working things out, working them to perfection. Absolutely no resistance in the market as we can see. Getting a nice pop. Apple, that's had a big run over the last couple days. That's not moving up as much. JP Morgan not really reacting to this. You did get the pop and the drop here, but so far, I mean, market traders had expectations yesterday. The Fed delivers. But any more details on that? I mean, we got Blue in the background. There's a chance we can bring him on a little bit early for his analysis.
Yeah, we'll bring Blue on in a second. I was just going to say, I mean, right now what you're seeing and with Powell's testimony this week, you're seeing that, Powell had kind of shifted tone, saying that you're seeing the labor market slow down a little bit, that the Fed feels that they're close to finally, being okay with where the inflation is at, and that it actually feels like we're finally getting close to the point where we can cut rates by a quarter, 25 basis points here, 25 basis points there. And that's without really a slowdown. We talk about the labor market cooling off, but without a type of slowdown that really indicates a recession. And I say that because when you look at what the earnings projections are, the earnings growth for companies is still projected to continue to grow. And that's why you're seeing these stocks trade at very high valuations historically, even with interest rates above 5%. But you can almost justify that to a degree when, again, those earnings growth is continuing to move higher, the expectations. And if that stops, that's what I think, instead of looking at people being all about inflation and the jobs numbers, I'm looking a lot at the earnings growth for the companies right now. And if those projections start to fall down, that could be my recession indicator, not necessarily anything in the labor market or inflation, but it's kind of Goldilocks economic scenario right now where you're seeing inflation come down without a slowdown that's indicative of a recession. But let's bring Blue on and see what he thinks, because he knows a lot more than I do.
All right, there he is.
Hi, good morning.
Former chief economist at the CME has been guiding us through this inflation picture just very accurately. Blue, top of your head, you said we were at 2% or near 2% before. Where do you think we are now? I mean, some people say it's a lot higher, a lot lower. What's your gut reaction to these numbers?
Well, they're good numbers. It's further progress. It's not enough progress, in my view, to convince Jay Powell and the FOMC that it's time to cut rates. They've been talking about their lack of confidence pretty regularly. But this is a good number and it's in the right direction. So it's all positive. But it may not be positive enough certainly not for July. We'll see about September. We'll get more information before then.
All right, you did your homework for us, and you got some nice looking charts here and or graphics here, starting with consumer price headline inflation year over year. What are we looking at here, Blue?
Well, this is before the number. So this number is going to dip down from 3.25 to close, right at 3%, the headline. Now, 3% is a pretty critical number because a lot of us, myself included, think that's kind of where we're going to get sticky. Well, we are sticky there, but we might stay sticky for longer, as Jay Powell might not like me to put it that way. So, the headline number is going to come down a little bit, but it's still going to be at 3%. It's going to have a 3 handle. So that's good, but it's not great.
Can we ever get back to 2%?
Well, we can, but not the way we want to. We were at 2% from 1994 to 2000 because of a lot of context. Globalization was in play in the late 90s and early 2000s. China was growing fast and producing cheap goods. Supply chains were working well, optimized for the lowest cost. There were a lot of good supporting factors for subdued inflation that had nothing to do with Federal Reserve policy. Anyway, those things, unfortunately, are all gone. We got geopolitical tensions, supply chains are being rearranged, globalization is not moving forward. Tariffs are in the news. The context that gave us 2% inflation for 2.5 decades is gone. So I'm in the camp that we end up at, more closer to 3. By the way, the chart you just put up is the problem with the inflation numbers not going down faster. We're still sitting at shelter inflation. I haven't seen the latest shelter one that just came out, but it's probably year over year going to be still a 5 handle, but coming down. We know shelter is coming down. It's a lagged indicator, so all you have to do is look out the window and it's coming down. But it comes down slowly.
I saw a statistic that even though there's more supply on the market, the prices are higher. That people are still sticking at these higher prices even though there is an oversupply. So that would not be a good indicator here. What would we need sheltered? You said it's been receding. In order, where would the equivalent, where would this have to come down to meet the overall goal of 2%? What would you be looking at for that?
Oh, you'd have to get to 3.
Oh,
services are going to be above goods. Okay, so discretionary goods, capital goods, durable goods are going to be below 2%, and services are going to be above. And shelter's a big part of that. But here's what happens. If you take the housing component, not the rent component, but what we call owner equivalent rent, when people own their houses, this is 25%, 1/4 of the CPI. If you take it out, we're at 2%. Given today's number, when I redraw this graph, it'll probably be right at 2 or even maybe just below. Unfortunately, if you take it out, you're assuming that the shelter component stays at 2%. That's not going to happen, okay? It's just not going to happen. So, inflation is much more likely to be sticky closer to 3 than come all the way down to 2. But if you're the Fed or you're an analyst, shelter is why it's not coming down faster.
Okay. All right. That's a look at that. It'd probably be closer to 2% today. Now we're seeing a big retreat in a lot of these restaurant stocks here. And a lot of that may be because of I see, minimum wage going up everywhere. I saw California fast food employees now want $20. Here's another sticky part of the inflation number. It's wage inflation here. And, that's coming down. It's coming down, but not as quickly as perhaps the Fed wants.
Well, this is where I really have an issue with the way many people, including the Fed, interpret this. I don't believe wages have anything to do with future inflation. Wages are a catch-up. We got a surge in inflation. We tried to catch up. And wages right now, this is they're sitting just under a 4% annualized growth rate, okay, year on year. If inflation is 3% and wages are 4%, people are barely keeping up. There's nothing inflation about these numbers. Now, you mentioned the restaurant industry. That's the one that's really interesting to watch right now, because the high-end restaurants are doing great and the low-end restaurants are having price wars. And they are still, the restaurant industry is still hiring, net hiring. They're still bringing people on. But from a profit perspective, when you start looking at the equity prices, if you're in the highly competitive fast food market, there are some challenges out there. And some of those are coming from expenses. But by the way, very few people overall get the minimum wage. Most people who work in restaurants do make more than the minimum wage. But the new hires get, that's where the competition is.
You said this indicates wages lag CPI. They do not lead it or cause it. What do you think the lag time is?
It's about 2 to 3 years, in the sense that, you get a surge in inflation, but it takes another year or two to negotiate with your employers for the unions and everything, and so it's a slow process. But wages are trying to keep up. They're not causing. That's just, to me, that's just incorrect.
Okay. PC core inflation. That's the Fed's big number here. This is the one you wanted to get to, Blue. What do you got?
Yeah, this is my favorite chart of the month, probably the next couple of months. I'll bring it on next time we have inflation data. Anyway, what we're doing is we're taking the last 6 monthly numbers, that 0.01, 0.1, 0.2, those kind of things. And we're annualizing them. So we take 6 months of data, because instead of taking 12 months, we're taking 6 months. And we're saying, well, if we kept at this pace, what would the annual inflation rate be? And the data that we had before this release told us it would be a little over 3%. Now, this data that came in is very good. So it's going to knock this number down. But this is the PCE version. It doesn't come out till the end of the month. But we know it's going to come down from that 3.18, probably very close to 3% at the next release. That'll be very, very good news for the Fed. But the reason I love this chart is you can tell what Jay Powell's thinking from this chart. In 2023, we had this dramatic decline in this indicator of inflation, and by the end of the year, it got to 2%. And Jay Powell told the world, hey, we might be able to do a couple of cuts, maybe more than a couple.
Yes.
And then in the first part of 2024, it goes back up, and he says, oh, wait a minute, I've lost my confidence, which many people did. For me, it wasn't a loss of confidence, just as, hey, we're just stuck at 3. We're going to bounce around. But this number will go down, and this is the one I think that is the most convincing number for the FOMC. If you ask the FOMC what they look at, they'll tell you they look at everything. And by the way, they do look at everything. And I don't argue with looking at everything, although the people that looking at everything, a point in every direction is no point at all. There's a song about that. Anyway, Randy Newman.
Well, but no, thank you. I mean, because this really explains, that shocking statement that we got at the end of last year. You're right. There we were, 2%, right? What could go wrong? And now it's keeping up. So you're saying the PC number will come down. It's just that we may not want to have too high of expectations when that number comes out at the end of the month?
Yeah, I think at the end of the month, the CPI and the PCE are measuring essentially almost the same thing. So, you get this good number here, we're probably going to get a good number at the end of the month. How good? Well, that 6-month indicator is probably still going to have a 3 handle, but it'll be right at 3. So that's good news, but is it good enough for Jay Powell and the FOMC? Their target's 2. And I don't know if it's good enough. Well, that's their decision, not mine. By the way, this is how the number of rate changes has changed. So this chart shows how many rate changes do you expect before the end of 2024? And, we went all the way up to 6 cuts when the Fed got optimistic back in December, January.
6. Okay, go ahead.
And now we're back at 2, but you can kind of see we occasionally bounce between 1 and 2. September, I don't specialize in timing. I'd rather do longer term direction. I'm a little more accurate on that. By the way, if you do both, you're going to get at least one of them wrong. But the September rate cut is still pretty tricky for me because I know we're going to get good data and I know it's going in the right direction. I just can't kind of get in the Fed's brain as to whether it's enough. And that's what he's talking about. Do I have enough confidence? And I'm still on the fence for September, but December seems quite likely. We'll have enough by then. So you get at least one cut.
Yeah, with the election too, everyone will say, "Oh, it's politically motivated here." But yeah, you could see 6 cuts, man, in February. That was factored in. I mean, it looks like it's going in the wrong direction. And another thing that you've mentioned in the past too is like 1 cut, is really not that much, right? I mean, just a quarter point. I mean, really, we got to look for more than 1 cut. But that's
that's right. If you want to see big changes in the economic outlook, you got to have more than 1 cut. I mean, we know that the Fed raised interest rates from 0 to 5.25%, and the economy still grew and jobs were still fine. So if they raise by 5%, you think a 0.25% cut's going to make any difference to anybody? I don't think so.
Yeah, and I mean, I think that's what we're talking about here is potentially 1 to 25 basis point cuts this year, and that doesn't, at the end of the day, to your point, Blue, especially for the biggest companies in the world, not going to make a world of difference. But just backing up, I mean, you look at when we had inflation at 40-year highs, and you had people calling for Jerome Powell's head. I mean, you've been you're a veteran. You've been in this business for a minute. How would you rate Powell's just overall performance here? Like, is he up there in terms of the best Fed chairman we've seen over the past few decades?
That's a tough question. The best Fed chairman over the past few decades. I don't think a lot of them are all that good.
You would do a better job. You would do a better job, huh, Blue?
No, not me, man. I'm not. I'm definitely not. But I'll tell you what. The issue is that the Fed's not really in the business of forecasting. They're in the business of policy. And they do have a longer term view, and that is what they should have. But I do worry that they're like 150% data dependent. And I'd really like for them to have some confidence in a view of the future. And I don't even mind if they're wrong occasionally. Roger Federer was explaining the other day to everybody that he only won 54% of his shots. I mean, one of the greatest tennis players ever, and he's 50-50 or just slightly better. So it's okay for the Fed to make mistakes, but I think they need to have a stronger view of the future. Jay Powell is a lawyer by training who's tried to become a pretty good economist. What he's become is a very traditional economist, unfortunately, and these are not traditional times. But I can tell from his press conferences that he's learning. He's being way more careful. He's appreciating the volatility of the data more, but he still doesn't have confidence in the future. His forecast. The only guy that did, by the way, was Alan Greenspan. I mean, before he became Fed chair, he ran a forecasting company, Townsend Greenspan. And he was really good at forecasting next quarter's GDP. He was great at that. He was about average to not so good at inflation, and he was terrible at foreign exchange rates. But boy, was he good at GDP. And he had confidence in his views, and he understood he would make mistakes. But we haven't seen that in a long time. at the Fed.
All right, big component here. The people are looking. We do have rising unemployment. I want to rip through these few slides here for the unemployment, and then I want to discuss implications for the market here.
Okay, so the jobs are good. The jobs are, they're a backward-looking number, but they're fine.
Okay, and unemployment rate spiking up a little bit, but that's kind of what the Fed wants, right?
Well, it is what they want. We're at 4.1. You can see from this graph that you're not there very often. That red line is at 4. We've come up from 3.6. Anytime you come up as much as 0.5%, that's a red flag. But this time is different because the pandemic has changed everything. So whatever, I think it's called the SOM rule. It's a great rule, but it doesn't apply this time.
All right, let's wrap things up here. What does this mean for equities?
I'm a bear in the early fall.
Okay.
I don't know what's going to happen tomorrow, but I always get exceptionally nervous around September. You come to Labor Day, you're managing assets or you're a hedge fund, you've made plenty of money. What do? You want to make sure you get your bonus. So you cut your positions and glide into the end of the year. Okay, you're a hedge fund, you're an asset manager, you're not doing well. What do? Well, you don't do what you've been doing. So you change your positions. Either way, September is one of the more difficult months in the market. Now, this chart you're looking at is one of my concoctions, but this is a risk-return probability distribution based on the S&P 500 futures options markets. And I look at every one of the strikes. I specialize in the out-of-the-money calls for the bullish side and the out-of-the-money puts for the bearish side. And what this tells you, and by the way, I don't believe what this says, but what it tells you is the market is worried about melting up. There's a long tail to the bullish side. But on the downside, they're only worried about a 5 to 10% correction. Nobody's worried about a 20% bear market. So I'm not always a contrarian, but in this case, I'm turning this graph upside down. And my timing, again, I'm violating one of my big rules, timing and direction in the same sentence. But, Labor Day is my trigger.
Okay, Blue, we got to let you go. Market's completely falling apart here. Blue Putnam, former CME chief economist, joining us here on Pre-Market Prep. We got a dramatic turn in the markets here. Dennis, are you ready to come back on here?
Yeah, and you don't have a dramatic turn here, Joel. You have rotation here. So IWM is right up near the highs. It's given up very little of the gain, up 1.8% here. What you have is the leaders, which is predictable here, the tech leaders getting hit on this, because this is where the crowded trade comes off. Because what we were talking about is tech has, been, obviously winning in any environment here. But if you actually get interest rates starting to go down, all of that laggards can start to come in. So what you're seeing is they're selling the tech leaders and they're buying all the interest rate sensitive stuff. Look at solar this morning, trading up 2.09%. If you go into the individuals like Solar Edge, up 4% here this morning. So clear running here. So if you take off the S&P blinders, which is obviously just full of, mega cap tech tech's doing very poorly in this. Apple now down $1, Microsoft down $1, Meta down $1, Google down. Tesla is, by the way, because Tesla would like lower rates too. So Tesla actually holding up a little bit better, not because it's not a leader, but because, hey, if their rates go down, people buy more cars. So, and Ford, GM, are holding up. But, you have given some of it back. But IWM is holding up really, really well here. TLT is starting to leak a little bit. That's your lie detector test. But really, it's a tale of two markets here right now. You've got interest rate sensitive stuff that's doing really well this morning, and the tech where everybody is hiding, the money's coming out of that right now.
So is it a one-day phenomena, or you think there's something?
Well, we saw this before, and we saw it on a little bit of a light number. I think it was last month or the prior month, where IWM, I think it was last month, IWM had the big pop, and then it started to leak. And within 3 days, what was that number on? Was that on CPI? I think it was.
Yeah,
if you see, you can look at the charts. Actually, go back. You can look at the chart back to June the 6th. Yes, I believe that was CPI. or June. Sorry, is it June 12th? June 12th. Yeah, that would be right. So June 12th, you had the big pop up, last CPI report, and then 3 days later, it gave it all back. So I do think, and I actually have been shorting some IWM on this pop. I do think that there is the possibility here that we could just go back into the same boat and people like, well, we don't like those stocks anyways. So I don't know if this is the big turnaround story here. Obviously guilty until proven innocent, but IWM, SPY is red. IWM is trying to go to the highs right now. Like it's literally going back with the highs. And like I said, I just started shorting some and I'm down in the short. I started shorting at 207 and a quarter because I was like, well, maybe it starts to leak. And I'm hedging it with other stuff. I was buying actually RSP against it. So I shouldn't say I'm flat out shorting IWM. I'm not. I'm just thinking RSP is up hardly nothing here. It's full of, equal weighted, which will give weight to the other stuff. I think it's absurd that RSP would be up the same as SPY right now. I think RSP should be up much more than what the SPY is. So that's why I've been putting that on this morning. I've just been shorting. Actually, with my trade, I've been going long RSP, short SPY, and short a little bit IWM, trying to get the balancing act there. It's a little bit of a balancing when you're doing that arbitrage. But RSP is kind of a hybrid between the two. So I'm trying to like mimic a little bit there. Just saying that RSP should be up more than the SPY, which basically RSP is up 0.1% right now. SPY is up 0.02%. It seems absurd to me that, we've been complaining about the equal weight RSP not performing. This is the kind of number that RSP should outperform on. I think it's just, I think there's sellers in there and they're not realizing that RSP is full of a lot of other stuff too. So I think once the market opens at 9:30, I think RSP will be up more than the SPY.
Yeah, and I mean, we mentioned it before the numbers even came out that with the big tech stocks and with the S&P 500, I mean, how was some of this priced in yesterday or the past few days where people I think were expecting lighter than expected or softer inflation, and now that we're seeing that, you're seeing some of the big boys again come down here a little bit, but we'll see if we end up being able to get some momentum again in the overall market. Real quick, so we only have a few minutes left. Just some headlines that we haven't talked about today. We haven't talked HubSpot yet, trading down yesterday after Google pulled the plug on its potential purchase of the company. And I mean, I don't know, like, I don't think the market was ever necessarily pricing in of a deal 100%, but you certainly had that run up on expectations that Google was going to acquire it. And then now that Google pulled the plug, I mean, I think what this closed down yesterday, 10%.
Yeah, down $100. It was a huge sell-off there, and a lot of people obviously thought this could go off the board at $700 or $800. Those people are all coming out of the trade. It looks bad, and I tweeted and then I deleted the tweet because you had the chief technology officer selling 25,000 shares 2 days before the deal got pulled. And he hadn't sold for a while, but then I did look, and it was part of the 10b5-1 plan, which is adopted back on February 27th. So it just sucks that the broker actually chose to execute most of those shares basically the day before the deal gets pulled. So optics look really bad. But if you don't understand what 10b5-1 plan is, that's a plan for insiders to come in and, like the brokerage takes over and just, slowly sells those shares into the market there. But he had a huge sale right before. I was like, well, that doesn't look good. But then when you click the link actually and you look at actually it was part of a 10b5-1
plan sale.
So.
Yeah.
Wow. So it's hard to give them crap for that. But man, the optics, I'm sure there's a few people that were looking at that saying, oh, that's a pretty good sale, buddy.
Dennis, man, you are just too honest of a guy, man. You put something out on Twitter, you find out you're wrong, and then you
I deleted it because I don't want to call them out. I just saw the sale. Somebody actually had messaged me like, look at the sale. I look, oh my gosh. And I looked, and he hadn't sold for a long time. There hadn't been a sale from this guy for a long time, this chief technology officer. I was like, oh, the timing of that is impeccable. And then so I tweeted it, but then a few minutes later I deleted it because then I clicked it. I was like, oh, it's a 10b5-1 plan. So it's not like he just went into the open market on his own accord and say, I'm going to dump some shares today. We're going to pull this deal tomorrow.
Just one quick comment on this HubSpot. You hear these rumors and you get the pops, and a lot of times that we talk about with these kind of things is that the longer it takes to get the real news, to get the confirmation that boom, it's a done deal, it's done at this price, boom, 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 the longer it takes, I mean, look what happened to X, right? I mean, oh, we're going to get a deal. It's going to be the greatest deal. We're going to do $50. The longer it takes for these things to come in. And that's why, yeah, you might be missing out if you sold the HubSpot at whatever, 650. I don't even know where it popped to. Nah, it hasn't been getting over 600 recently. Yeah, and if it's taken over at a much higher price, you feel bad. But there's also that element of the deal not going through there. But wow, we're red here in the S&P.
Yeah, we are. I
Yeah,
mean,
yeah.
this is such an interesting day. And the rotation is, can you hear me?
Yeah.
Oh, I don't know what the heck's going on my computer. It's just froze right up.
There's
I was like,
something going on, Triple D. I might have to fly out to Toronto, drive up to your place, and
you can
work
hear
on
me
your-
fine right now.
Yeah.
Correct.
Because my
Loud and
entire
clear.
computer just froze here. So I don't know
Uh-oh.
what's going on. HPQ. I guess I got to go buy a Dell. Intel processor, junk. Completely frozen here. I don't even know what to do. Anyways, as long as you can hear me,
we'll
I
wrap
can keep
it up.
talking
Yeah,
here.
we'll let you go.
Well,
We'll
no,
let you
as long as you can hear me. If you
Okay.
can hear me, I just want to give my final point here.
Okay.
Violent rotation here today. Very violent. Take off the S&P blinders. This is a fantastic day for everything except the Magnificent Seven and tech. Tech is not having a good morning here. Consumer staples have turned red too because they're defensive and they're like, we don't need those. But, we never got the Pfizer news. Pfizer coming out with an oral drug pill. It's getting a little bit of a lift this morning. You have a lot of stocks that have been lagging, doing actually pretty well this morning. So I think today, at least at this moment in time, is leaders to laggards, laggards to leaders. So that's what you're seeing here this morning. I don't know if that lasts. I'd be cautious chasing here those stocks because you get these pops. There's just so much overhead supply and people who want to own those leaders still. I'm not sure 0.1% on the CPI changes that. So maybe you get an opportunity to actually get out of some of those crappy stocks this morning. Use this opportunity. I kind of think I'm more in that camp as opposed to chasing the crap this morning.
All right, you picked a good level though here in the IWM, Dennis. We have a series of highs at this 207.63 area. That's where you've peaked in the pre-market. So if you're getting a 207.50 bid on, folks, you better play it close to the belt because not much the top of yesterday's range. Tomorrow we'll get a look from the floor from Jonathan Corpina. He might be at home, but to see what the big boys are doing after the recent numbers. So, AB, anything you want to add to wrap things up on this Thursday?
I was going to ask who we had coming on tomorrow, but you already got it. Jonathan Corpina, excited about that. So an exciting morning this morning with the numbers. Of course, shout out and thank you to Blue Putnam for joining us to help us break down those inflation numbers. A lot of volatility today. We'll see how we end up, but thank you to everyone who tuned in to today's show. Please smash the like if you haven't already. And of course, we will have live trading coming up after this to walk you through the open. And we will see you guys tomorrow morning.